This week, we have some of the biggest news in the market. Of course, it is the NFP report, or the non-farm payroll, which will give us an insight into US jobs. Now, the whole world pays attention to US jobs because it can be a leading indicator as to how the global economy may function going forward because of how massive the United States is and its impact economically everywhere. If the labor market in the US looks strong, it's good for everyone. If the labor market is bad in the US, it's not so good for everyone. Let's dive into whether or not NFP is something you should probably just get out of the way of, or if there's some actual opportunities that you may be able to spot. Let's jump in. So first of all, when is NFP and where can we expect to see the data? Well, it's the first Friday of every month, usually is when the jobs numbers come out to the public. And of course, the next one here at the time of recording this is September 1st. It's coming out at 8:30 a.m. US Eastern, and I do want to remind you guys that we will be streaming this event on my channel as well as the A1 Trading YouTube channel. Make sure to subscribe and hit the post notification bell on this channel if you'd like to get notified when we go live for the event. You can tune in and see what I'm trading at the time. Anyways, let's talk about why NFP even matters. Why should you care? Well, job creation, as I mentioned, is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. I got this from Forex Factor. I thought it illustrated well how important this report really is. It shows us how strong the consumer is going to be. Think about it. If everybody's got jobs, things are good. But if everybody does not have jobs, things are bad. I'll show you a little bit more about that in just a second. The Fed also right now is very stern on getting inflation under control. Well, you might be saying, well, what does that have to do with jobs? Everything. Jobs are incredibly impactful on inflation here in the United States because if everybody has jobs, they're able to spend. In fact, check this out. Strong labor markets mean a stronger economy because think about it. If you have a paycheck coming in, you might be more willing to go to restaurants and perhaps do some bigger spending, like, of course, housing, right? Are people buying houses? Are people renting apartments? Are they paying those new extremely high rents in the United States? I don't know why we're all doing it, but we're all having to do it because, again, rent is going up because the consumer is still relatively strong. Until that consumer cracks, inflation is going to really stay a problem here in the United States, as it has for many places. Notably, places like the UK are experiencing even worse here than in the United States. So again, if people have jobs and they're getting wage increases, if they're getting, a raise, it's going to cause the consumer to be stronger and to spend more money, which leads to an unintentional side effect of everything going up in price, which again, if you're like me, you're getting pretty tired of that here in the US. Things are getting expensive. Anyways, this is job creation this year. What's the Fed been up to? Well, it's had some success in this area, and this is why the stock market has been jumping so much recently. People are saying, okay, hey, the Fed is actually getting some of this inflation under control through the jobs market. Again, inflation is so imperative to keep it under control that it doesn't destroy the economy, because high levels of inflation for a sustained period of times cause prices to go parabolic and cause everything to kind of explode or implode on itself. Job creation this year has been down. We've actually seen jobs still being created, as you would expect in a healthy economy. However, we've seen some nice slowdown here. Now, why do I say nice? Well, again, remember, it's a necessary evil that people kind of need. Well, at least that's subjective, but I think it's kind of a necessary evil that we do see the market in terms of labor cool a little bit so that inflation doesn't destroy us all, right? We need to see jobs cool down, people stop getting wage increases so much in order for all of us to be able to afford what's at the grocery store on the stores. Anyways, let's keep going and let's talk about the US dollar. So recently the USD has been really strong. And this is again because the Fed has reiterated that it's still willing to raise interest rates further to get that inflation problem under control. Raising interest rates makes everything more expensive and stunts the spending of the US economy. So will jobs numbers this week really impact it? And what should you know about the charts that you're watching? Let's go over to the dollar chart and take a look. So we're taking a look at the dollar index here, and you can see that overall we've been in a really strong upward trend. So the question is, before jobs numbers come out on Friday, should you sell this thing if you're in dollar longs? Well, here's something to think about. We just had, in terms of when recording this video, literally a few, like 30 minutes ago, we had the JOLTZ jobs numbers come out. And at this time, of course, what this told us is that lots less jobs were created, or less job openings were were shown than were expected. Less opportunities, we're hiring signs, less of those went up in the window, if you will, and that showed perhaps some cooling in the jobs market, which the dollar didn't like so much. But of course, what did? The NASDAQ. And I've got to just say here, let me take a second to brag. I am long this NASDAQ move, and it is incredible so far. Here's my current positions and where I'm at. I'm on the NASDAQ chart. The QQQs is just the ETF version of the NASDAQ, and we're up over $7,000 on the day, $3,600. This thing is exploding to the upside. Anyways, there's a little bit of a sneak peek as to where my positioning is, but I want to show you this in terms of the dollar index, which is really our focus. Should you be selling the dollar? Well, be careful here. The dollar is still in a pretty strong upward trend, and until we really see NFP on Friday, I think we have to be cautious with this jobs number that we got out of JOLTZ openings here today. Now again, at the time of recording, we saw a slowdown in the number of job openings posted in the United States. That caused the dollar to weaken, as that could show some slowdown in the labor department. So you take a look at the dollar index and you say, okay, this thing is seemingly rounding off, but it's a little bit too soon, I would say, to just outright short the dollar index, because we don't know what jobs numbers are going to look like on Friday, which I think is really important to wait and watch. If we see job strength, basically the dollar index will probably make a push back towards the highs. And if we see dollar weakness, it's possible that we actually get a breakout of this structure, in which case I think we have a very interesting scenario. Now, clearly, I just revealed my hand a little bit. I am long indices, which I wouldn't mind if the dollar index continued to weaken, because again, it would probably help out my NASDAQ position, as job slowdown would mean, hey, the Fed might not be so likely to raise interest rates, and the NASDAQ would love that. And so would I, because of course I'm long. Anyways, perhaps waiting for a breakout here on NFP's numbers could be very impactful for an opportunity on the short side of the dollar, but we have to be careful, because if this market does find a bounce point off of this upward trend and NFP comes out strong, the exact opposite could play out. So you might just say, Nick, you just covered your bases. You're just saying it could go either way. And in some ways, you're kind of right. I'm not forecasting what NFP is going to do. I like to wait for the news to come out and trade the aftermath. We will be streaming the event, as I mentioned earlier, where you'll see if I'm taking trades or jumping into something after the number comes out. But again, I think that what is my way of approaching this is not to trade before the spike of NFP, but rather to look at the full picture, full understanding of the situation, and then trade the aftermath. So let's keep going with this story. Also, speaking about the JOLTZ numbers, I thought this was really interesting. So check out the spike. We're going to show a recording and then just a little bit of reaction from Frank, Tom, and I on the show today. Job openings numbers here in just a moment and see if it does have any impact. Again, I've got the dollar index here. An initial push to the downside. That is a pretty substantial move here to start off. It's moving here to the downside. Dollar. Yeah, this is the dollar index. So we're seeing some dollar weak. Probably seeing a little bit of a pop on things like the euro. Let's see how the indices are reacting. Look at that. Nas loves that. Gold also seeing a pop to the upside here. So perhaps some good numbers out of the job openings, or actually, I don't know, Frank, what does that mean? Dollar strength, dollar weakness. That less job opening, is that likely what's happening?
I would say that this is optimistic for the indices to see, I don't really watch JOLTZ, to be honest, but, because the labor participation rate is changing. So the number of job openings doesn't necessarily mean much. I think NFP is a way better indicator, but seeing lesser job openings is kind of like a hit at the job market, and that's what the Fed wants to get down to their target goal. And I think when you see poor economic data like this, investors will be more, I guess, relieved that, okay, maybe the Fed won't be as aggressive. But
and we see 8.83 million here on the JOLTZ job opening. So that is a pretty substantial miss in terms of, well, I guess it depends who you ask, right? If you're a dollar bull, obviously this is not great. This is showing perhaps some weakness in the job market. But Frank, I totally agree with you. In terms of the indices, JOLTS job openings, not usually something that we spend a tremendous amount of time focused on. However, when you do get a pretty substantial miss like this is pretty meaningful. That is a substantial miss in terms of that's
Right.
what, 750,000 job openings that weren't there when it came time to report. So there's a lot of perhaps suggestion here that this might mean the job market is finally starting to see some signs of cooling. But again, like you said, we probably really will only get true confirmation from NFP later this week, at least in terms of the indices. The indices really like this initial move. We see also the euro making a push higher, actually breaking this downward trend. I was thinking we would see some sell-off there, but it does seem like dollar weakness is definitely the theme of the day. Look at that dollar index coming down pretty hard. I want to go back to Tom. Tom, any dollar pairs that are really catching your eye on this move here this morning?
No, I'm in euro Canadian dollar as we speak. Got a couple of alarms going off as well. So yeah, because when US dollar news comes out, I'm reluctant to be in a US dollar pair, but I'm happy to trade non-US dollar pairs. And
Sure.
I think this is something to do, obviously, with oil as well. I mean, oil has had a real, like Frank was explaining, that this weekly level of oil is unbelievable. This has been holding since November 22 up until today. This is like the most stubborn piece of resistance I've ever seen in trading. This level, and we're getting some oil weakness as a result, and this led me to think EuroCAD would also be a nice buy opportunity, because if we look at the daily chart, we were in a downtrend and now we're in a uptrend stroke range. Yeah, so
Sure.
The idea was just to come from the bottom of this range up to the top of this range, with the backing of oil potentially coming down, and because of that euro US dollar strength is but we should be getting US dollar Canadian weakness as well, as in the CAD should be coming down, but that euro is flying. Yeah,
It sure is. So the overall picture for the dollar is still pretty bullish, I would say, at this time. We still have a Federal Reserve that is dedicated to getting that inflation problem under control, and they're going to employ rate hikes in order to do that, or keeping rates at an elevated rate for a long period of time in order to squash that inflation problem. So I don't necessarily think that the dollar is just a massive crash coming into play. I think the dollar is still relatively supported, and that we could see the dollar strengthen here going forward. That doesn't necessarily mean, though, that I think indices are just going to crash. I just think that we may be in for a little bit of a prolonged high interest rate environment where the dollar looks relatively attractive relative to other currency pairs. So I actually wanted to show you guys something in terms of the commitment of traders data, so we could take a look at what institutional money is doing next. So we're going to take a look at the COT data now. Okay, so now I've got a COT chart pulled up here for us, and I wanted to specifically focus on the US dollar. Now, if you're not familiar, let me take a second to just explain what we're looking at. This is the commitment of traders data, and it basically shows what institutional money is buying or selling based on their net positionings that they have to report to the CFTC each week. So basically, hedge funds, smart money, are they buying, are they selling the US dollar? Well, right here you can see that in terms of a percentage basis, based on the futures contracts that have been reported, 55% are long contracts and 45%, let's call it, are short contracts. So there's kind of this mixed sentiment. It's not quite a massively polarizing situation where you see the US dollar like 90% long, but it is slightly USD long favored. But this next chart might be a little bit more telling to you. Let's take a look at the USD, and we'll take a look at the most recent situation. You can see there's our net long to net short contracts. We have 23,328 in terms of long contracts opened and 18,739 short contracts open. Now the most recent week, now this little delta here shows the week to week change, as COT data reports are reported weekly. And sorry for this text being so small. Maybe with magic editing, we can move in a little closer to this text. But anyways, now moving on, the number of long contracts this most recent filing showed an increase in longs and an increase in shorts. So what the heck does that mean, Nick? Well, They can't actually both increase at the same time. This just means, think about it, they're again all pulled together. Institutional money seems to be betting more on the dollar, both long and short. There's just more interest coming into the dollar index as we approach September. So again, the long percentage still outweighs the short percentage, but now let's take a look at the week-to-week chart so we can see what the trend has been up to recently. Okay, so now we're looking at the week-to-week data, and you can see this red line represents the secondary asset. If you don't know what that means, the euro is the first asset, and the USD, which is what we're after here, is the second asset. So the red line shows the US dollar, and this is something that's kind of alarming to me. We've actually seen that in June, we had kind of a peak. June, July, we saw a peak in the dollar net long interest, which was actually pretty substantial. We saw like a 77% long ratio. It's now creeped all the way back down to where it currently is with only 55% long. So in fact, the most recent has been pretty short bias or pretty sell biased on the US dollar. There's been a real resurgence in kind of coming back the other way. It does seem like overall the dollar is long biased still, but has come down a long way from its 77% dominance. So basically, institutional money used to be a lot more long, and it seems to be abandoning that trade slowly. So when we look at the dollar index on a chart, I do think that it's a bit top heavy and we've got to be careful. By the way, I just want to point out that if you've been watching our channel for a while and you like the data that we pull up in this video or in any of our videos, I just mentioned the COT data. If you guys would like to get access to that tool, we're currently doing 35% off of the EDGEFINDER. All you have to do for information about that is message us using the link at the top of the description. You'll be connected to someone on my team who can give you more information about our software and more on that in just a bit. Let's keep going with the video. So next, I just wanted to make a quick mention to gold. In case you didn't see my video yesterday, I want to encourage you to check that one out if you'd like more information about where I see gold going right now based on the fundamentals. I did a full video yesterday, so I just want to encourage you to click the top right hand of your screen where you see a little card popping up. If you'd like to check out my thoughts on gold fundamentally, that video might be one for you. Short term, I'm kind of bearish on it, but again, check out the full video for more information. So now let's talk about the NASDAQ. Now I already bragged about this a little bit, but let me brag a little bit more. I'm currently long on it and it's going really, really well. Stocks remain relatively strong with decent earnings and a relatively strong consumer, as we just got done talking about. But this job market cooling off doesn't necessarily mean the economy is just entering a major recession, which would of course not be great for stocks, but it's just showing that, hey, the Fed might be getting what it wants, which is somewhat of a potential soft landing effect where you have jobs cool off, but it doesn't crash the economy and things kind of go back to a normal state where we don't have such high levels of inflation. That would be ideal for my NASDAQ long position. So, you know, fingers crossed that that does continue to play out the way that I've been looking for it to do so. Anyways, I've been long most of 2023. It's been an incredible year for me in terms of my trading performance. In fact, I'll share a screenshot on the screen right now. This is my personal trading performance this year. It's been really, really good overall. And again, if you're not already inside of our Discord channel, you can see every trade that I take with full breakdowns. If that's an interest to you, again, use the link down below in the description to message us and to learn more information about how you can get access to the trade signals being shared by myself and by Frank, my colleague. Now, let's also take a look at COT for the NASDAQ. I thought this was really interesting as well. All right, so now our focus has shifted a little bit to the NASDAQ, and let's talk about this for a second. The NASDAQ, it's kind of similar to the dollar where it's like 55-45. Actually, it's very, very dang close. Anyways, the NASDAQ is something that obviously I'm long on. I want to show you something that I caught recently. Should you sell this one right before the NFP news? Well, I'll tell you, I'm trailing a stop on it and I've updated members. In fact, I'll show you what that looks like just so you can see what that does in fact look like. So again, here's the NASDAQ position. I've trailed my stop loss into profit and I updated members here this morning. So I am still long the NASDAQ. The trade's going really, really well. We're floating at one point here this morning, like 3,200 bucks on the trade, which has been a really nice move there inside of the group. But part of the reason that I have been long biased has been off of the EDGEFINDER's idea here, where we see, hey, look, a big decrease in shorts. It seems like big money is offloading some shorts and staying relatively long biased on the NASDAQ. So I do like this and it's been a nice confirmation in my trading. So of course, I'm using the EDGEFINDER to help me spot all the trades that you guys see on my channel and videos each and every day. So with NFP around the corner, I hope this helped you a little bit to prepare for all of this stuff. Again, I'm generally speaking kind of sketched out about the dollar. I've been short-term long bias on it, but if NFP comes out and continues to show job weakness, I'm going to be pretty USD bearish and continue to be bullish on the indices until proven otherwise. I do also want to remind you guys that we're doing that 35% off sale. If you would like access to the tools that I use in this video to get the COT data, to also find the trade setups that I find each and every day, consider checking out the EDGEFINDER, which is linked down below in the description. With the EDGEFINDER, well, we're doing a 35% off. You can get access to our Discord group or our software for 35% off, which is a major discount. You get access to our trade alerts, which you can see the entries, the exits, the breakdowns behind every single one of my trades, as well as Frank, who is my colleague. And with the software, you get access to COT data, our fundamental generated signals, etc. And again, remember to message us down below. It's free to message us and ask us a few questions. If you have software related questions or membership questions about what we offer inside of the Discord, please feel free to message us. Again, someone on our team, a real person, not a robot, will chat with you about what we have to offer. And again, while that 35% off sale is happening, you'll get some of the best prices that we've ever offered on our products and services. So check them out. Again, here at a1trading.com, you can find and chat with someone on our team. Thank you very much for tuning into this video, and I hope it helps you a little bit prepare for this week's NFP. Have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.